Thank you for tuning in to learn about the significance of managerial accounting. In previous videos, we explored various aspects of financial accounting. By the end of this video, you will understand the purpose of managerial accounting, the role that managers play to bring structure to their organizations, and the basis for decision-making. It's all about learning why and how to manage. Let's start with a quick recap of the two most common branches of accounting: financial and managerial. Financial accounting serves the needs of external users. It focuses on recording of transactions that lead to a formal set of financial statements based on accounting standards. In contrast, managerial accounting focuses on the needs of internal users. Its core activities include providing strategic direction, performance measurement, and the management of organizational costs, processes, and risks. Managerial accounting is also known as management accounting or cost accounting. It deals with the compilation of information and allows managers to make decisions and plan for their organization's future needs. All managers are required to do three things: planning, thinking ahead for their organizations and being ready for what is yet to come; directing, implementing the plan and identifying specific needs and resources required to execute it; controlling, monitoring progress, staying on track, and fixing things when they break. But how do managers manage? In smaller organizations, they make personal observations, ask relevant and focused questions, and evaluate answers. In bigger organizations, more formal evaluation systems are used, for example, budgets, responsibility centers, and performance evaluations. Regardless of the size, to operate successfully, all organizations and managers must plan. There are three types of plans. Strategic plans. These are long-term, high-level plans that address strategic priorities of an organization. Business plans. These are medium-term plans that serve as a roadmap that outlines how you will achieve your strategic priorities. Annual plans. These are short-term plans that focus on your day-to-day operations, including finances, human resources, and communications, to name a few. For a plan to be executed successfully, it is ideal for managers to be involved at all levels of planning because they have to implement it. Managers are also responsible for providing their organizations with systematic structures. Such structures help managers smoothly execute everyday tasks by defining clear relationships between different organizational functions. They help create a reporting hierarchy leading to effective delegation of tasks. Lastly, they establish clear lines of communication between managers and their teams. To make decisions, managers often conduct what's known as the cost and benefit analysis. This analysis does not have to be solely financial. By weighing all types of relevant costs for a particular decision against its benefits, managers are able to arrive at rational conclusions and informed decisions. Let's understand this with an example. Suppose you own a car that you originally paid $5,000 for and have now received an offer to sell it for $6,000. The only thing that is relevant in this decision is the opportunity cost. In other words, if you retain the car, you lose the opportunity to receive $6,000. Note that the $5,000 you originally paid for the car is historical cost, and it's great for academic interest, but it cannot be used to make a future decision. As managers, you want to understand the costs and benefits that are relevant to a particular decision, to know what's relevant and what's not. To do that, you need to answer three questions. First, does the cost or benefit relate to the objective of the business? If the answer is no, then it is irrelevant. If the answer is yes, ask yourself if the cost or benefit is related to the future. If it isn't, then the cost or benefit is irrelevant. But if it's a yes, then ask if the cost or benefit varies with decisions. If it doesn't, then it's irrelevant. If the answer is yes, then it's a relevant cost or benefit. For a cost or benefit to be relevant, the answer to all three questions must be yes. As managers, you need relevant information to make good decisions for your organizations. Such information helps with organizational decisions pertaining to volume and production, pricing, budgeting, and capital investments. We will look at each one of these decisions in future videos. We hope this video has been helpful in demonstrating the need for managerial accounting and the role of managers. Subscribe to our channel and find us on our socials for future tutorials. See you next time.